Gold's price moved in a sideways manner over the past week. Today we are to discuss the fundamental challenges laid ahead for the precious metal, as well as upcoming financial releases that may affect the direction of its price action. Finally, we will be concluding this report with a technical analysis of gold's daily chart. It should be noted that the Fed's interest rate decision failed to move gold's price as much as some analysts may have been expecting. The bank, as expected, remained on hold, displaying a data dependence on its accompanying statement, yet the new dot plot in the bank's economic projections moved higher, implying that the Fed policymakers are prepared to keep rates high for longer, supporting the dollar. Yet in its press conference, Fed Chair Powell stressed once again the bank's data dependence. Should Fed policymakers continue to release hawkish statements, we may see gold's price slipping in the coming week. Overall, we see the case for fundamentals to lead gold's price. We note that the negative correlation of the dollar with gold's price was interrupted in the past week, as both the dollar index and gold's price ended the week in the greens. Nevertheless, we expect the negative correlation of the two trading instruments to be on the display once again in the coming week, and should we see the dollar gaining further support, we may see gold's price dropping. We also note that the drop of US yields in the past week may have been a factor allowing gold's price to rise. Yet as the week began, US yields have started to rise once again, and should we see them rising further, US bonds may become a more attractive alternative to gold for investors. Another factor which could affect gold's price on a fundamental level would be central bank gold buying, especially from the People's Bank of China. Should central banks resume their gold buying, we may see gold's price gaining further ground. Despite a possible dominance of fundamentals and the Fed's monetary policy stance for gold's price, until our next week, there are still a few US financial releases which could affect gold's price. Beside today's release of the US retail sales and industrial output growth rates for May, we know that on Thursday, the June's Philly Fed Business Index, which is expected to rise, and if actually so, could weigh on somewhat on gold's price. Also, we note the release of the weekly initial jobless claims figure, and a drop is expected after last week's substantial rise, which could weigh somewhat on gold's price as well, yet a possible additional rise could imply a slack in the US employment market, and thus could provide some support for gold's price. On a technical level, we note that gold's price maintained a sideways motion between the 2,290 support line and the 2,355 resistance level over the past week. Given also that the RSI indicator remains near the reading of 50, implying a rather indecisive market, we tend to maintain our bias for the sideways motion to continue. Yet in the bigger picture, gold's price action did not escape the boundaries of the downwards channel guiding it since the 20th of May. Hence, bearish tendencies for the precious metals price may still be present. Yet for a bearish outlook, we would require gold's price to break the 2,290 support line and start aiming for the 2,220 support base. On the other hand, we note that the 100 and 200 moving averages maintain an upward slope, yet that may be a result of a delay in their reaction to the interruption of the prior upwards movement, as implied by the drop of the 20 moving averages, which is also the median of the Bollinger Bands. Should the bulls take over, we may see gold's price breaking the upper boundary of the pre-mentioned downwards channel in a first signal of an interruption of the downwards motion and continue higher to break the 2,355 resistance line, with the next possible target for the bulls being the 2,430 resistance hurdle. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you solid trading.